Hello, listeners. I am Vikram V, Vice President and Co-Group Head at ICRA Limited. And through this podcast, I will be sharing our views on the Indian sugar sector. Firstly, on the sugar production, the net sugar production is estimated at 32 million metric tons in sugar year 2024, with the closing stock likely to be over 9 million metric ton as of September 2024, significantly higher compared to the sugar stock of 5.6 million metric ton as of September 2023. For sugar year 25, we expect the net sugar production to decline to 30 million metric ton, given the expected increase in diversion for ethanol to 4 million metric ton from 1.7 million metric ton in SY24. Even after considering a higher diversion to ethanol in SY25, the closing sugar stock level is expected to remain moderately high at over 10 million metric ton as of September 2025. In this context, the clarity on policy measures towards allowing higher diversion beyond the expected level for ethanol, as well as allowing exports, remain key monitorable for this sector. The domestic sugar prices are expected to remain firm at about 38 to 39 rupees per kg till the start of the next season, thereby supporting the profitability of sugar mills in financial year 2025. Coming to the ethanol blending program, there has been an encouraging trend in ethanol blending, which increased from 5% in ESY 2020 to 12.5% in ESY 2024 as of May 2024. However, the share of sugarcane juice, B heavy and C heavy molasses together declined in ESY 2024 compared to the previous year, mainly due to the capping of diversion set by the government. With the expected increase in diversion in ESY 2025, it will support the government's blending program and the target to increase it to 20% next year. In order to achieve the 20% blending target, ethanol production capacity of 1700 crore liters is required against the current capacity of 1380 crore liters. This requires significant capex investments in distillery capacities with multi-feed capabilities. Apart from the ramp-up in capacity, the key challenges that must be addressed are the availability of sufficient feedstock for grain-based distilleries and infrastructure ramp-up on the part of OMCs to support higher blending levels. Further, timely launch of E20 compliant vehicles and the adoption of these vehicles by the public would be key to achieving the 20% blending target. Coming to our outlook for this sector, we estimate the revenues of integrated sugar mills to show a growth of about 10% in FY 2025, supported by increase in sugar sales volumes, the firm sugar prices, along with the higher distillery volumes. The profitability of the sugar mills is expected to remain stable, supported by the farm sugar prices, the growing share of distillery segment in the revenues, and this also factors in the increase in the cane prices that was approved by the government. Overall, our outlook for the sugar sector remains stable. Thank you for listening and stay tuned for our upcoming podcast.